penny stocks to buy under $1 in January 2021. One of the fastest growing trading apps for penny stocks in 2020 was Robinhood. By several accounts, the mobile-first app corralled millions upon millions of new day traders this year. Known for its gamified setup and user-friendly and simplistic functionality, it became the app of choice for new traders. The problem that many had was the actual learning curve that day trading has. Anyone can sign up for an account, fund it, and begin buying penny stocks on Robinhood. But unlike some of the posts on places like Reddit would suggest, there are better ways of trading besides YOLOing. If you don't know what that is, you're probably better off. Needless to say, the term Robinhood penny stocks has become synonymous with listed penny stocks. These are companies with shares listed on the NYSE and Nasdaq. Compared to OTC penny stocks, the ones that are listed have higher standards, especially when it comes to reporting requirements of the exchanges. Are all penny stocks on the OTC bad? Not necessarily, but apps like Robinhood and Webull restrict access due to a higher frequency of manipulation, lack of financial information, and generally lower liquidity presented. Now, I know plenty of OTC penny stocks that go against this thought process. But for better or worse, these new platforms have chosen this direction. What's more, is since many of the super cheap stocks trade on the OTC, Robinhooders have a smaller pool of stocks under $1 to choose from. Lucky for you, you're watching this video. While these stocks are trending this week, low-priced stocks like these can become highly volatile and very risky. As opposed to a stock like Apple, AAPL, a move of just a few pennies can equate to a large shift in percentage. Just one example, a 50-cent stock that moves just 10 cents would see a 20% change in price. For companies like Apple, 10 cents is nothing. With this in mind, here are a few penny stocks on Robinhood that can be bought for under $1 right now. Are they actually worth the risk though? Number 1, Jaguar Health Inc. Jaguar Health has been climbing strongly this month. In a late 2020 bid to reach $1, shares of JAGX stock actually broke above $1.20 for the first time since last year. News at the end of November stoked the initial move. Jaguar announced that its plan would be to develop and commercialize its crofelemer treatment for specific symptoms seen in long-hauler COVID-19 recovery patients. What's more, is that as part of this plan, Jaguar engaged in preliminary discussions with Swiss Growth Forum. It was a sponsor of a European special purpose acquisition company, Post-Pandemic Recovery Equity. Discussions were with regard to the SPAC's potential merger with an operational subsidiary of Jaguar that would to be established in Europe with an exclusive license to crofelemer and Mytesi for the indications of inflammatory diarrhea and HIV-related diarrhea. Fast forward to the end of December and more news spiked JAGX stock once again. It signed another agreement for a $6 million non-dilutive financing. Lisa Conte, Jaguar's president and CEO, explained that the timing of this transaction aligns well with the progress of the recently initiated pivotal Phase 3 trial for CTD, for which patient enrollment is progressing. Heading into 2021, traders will likely focus on what, if any, next steps come in light of these latest developments. Furthermore, initiating the Phase 3 trial has plenty of things to consider moving forward. If JAGX is on your list of penny stocks to watch right now, keep this in mind as you further your research. Number 2, Artelo Biosciences Inc. Artelo is another penny stock that has seen some interesting technical moves recently. Shares of ARTL stock firmly broke and held above the 50-day moving average for the first time in months. Furthermore, as it heads toward the 200 DMA, the stock continues extending its gains from the beginning of November. At the time, ARTL was trading around 45 cents and has since reached highs of over 75 cents this week. One of the things to take a closer look at with this company is the development of its ART27.13. This is the company's supportive care therapy for cancer patients suffering from anorexia and weight loss. The company previously received clinical trial authorization in the UK to begin its cancer appetite recovery study. Artelo said earlier this month that it was on track to start enrollment in the CARES study before the end of the year. So far there haven't been any further updates to this. However, something else to consider is that the company also filed a composition of matter patent application directed to a new SLID dosage formulation with the UK Patent Office. This application also included its method of use. Number 3. Iterum Therapeutics plc. Iterum, from a stock perspective, has been a bit choppy during the second half of 2020. You'll see what I'm talking about on the stocks chart. Numerous gaps, both up and down, have results in more of a sideways trade overall. However, similar to Artello, December has been a much stronger month for the penny stock. Shares of ITRM have put in a more clear uptrend and climbed from around 45 cents to highs this week of $1.02. For now, however, ITRM stock price is hovering around 99 cents. At the end of November, Iterum was able to submit its new drug application to the FDA for its sulopenem ethodraxil, probenecid for treating uncomplicated UTIs in certain patients. This submission marked a high point for the company, and traders have since responded favorably. If ITRM is on your list of penny stocks, the timing of the FDA's decision will be important. What's more, is that the company filed a new patent application with the US Patent and Trademark Office directed to the composition of a bilayer tablet of sulopenem ethodraxil and probenecid. Heading into the new year, Iterum also has a few shifts going on with its leadership team. Namely the resignation of its chief scientific officer. The company's senior vice president and head of clinical development, Dr. Steve Aronen, will now lead Iterum's development and regulatory activities heading into the new year. The bottom line is that there are many moving parts going on that could be points of interest going into January.